Lazarus doing the morning call for Scott, who is out today. Today we're going to take a look at some of the indexes as well as some specific symbols. Before we start, I do want to say that I think that it's really, really important to listen and listen closely, because what the market looks like it's setting up to do could lead us into a very, very dangerous, dangerous environment. For those of you that are bullish or heavily weighted longs, or are not paring down in your risk, it's time to start to think about paring down. The market is looks to me like it has some damage that's been done to it, and it looks to me like selling is becoming more of a common theme on a day-to-day basis. Although we haven't seen a lot of technical damage, the foundations are definitely starting to crack, and I do think that in the week, the next 10 trading sessions, we could be possibly substantially lower. So for those of you that are technically inclined and are looking to pare down risk, I think the market's telling you that it's time to do so. We've had a fantastic run in the market. Since the '08 lows, we've basically been a trajectory right back up, trading at levels that I think are a bit extended, especially in the last 6 months, 3 to 6 months, where we've gone basically straight up. So, and we'll take a look at that more technically so we can get a better idea. So let's hop right into it here. We're going to start with the XII. And the XII, to me, is a very interesting chart. It is a measure of the institutional holdings, the largest institutional holdings. And we can see here that, and I think this is a very good index, because what it's doing is it's basically looking at the most heavily owned stocks out there by large institutional money. So what we call smart money. When smart money looks like it's starting to crumble, the market will probably crumble with it. So let's jump right in here. It looks like a little bit of a bear flag here in the XII. We broke some trend lines earlier. You can see going back to the October lows of last year. Like I said, the market's been on a really, really great run. So if you're not, paring down up here, you're probably not doing your job in terms of protecting your capital and your risk. Looks to me like we are setting up for lower prices. We broke this trend line, and we're probably going to head first stop to this larger trend line, which isn't that much lower, but I suspect we might even crack that too. Retracement-wise, and again, we're not trading this index, but we're just looking at it with a technical scope. We could pull back 38, 50%. So possibility here that we see some lower prices, as this to me is a very ominous bearish pattern that we have to pay attention to. Let's jump into the spiders, because you're going to basically see the same kind of chart here. And again, breaking down, or potentially, I should say potentially, breaking down, this to me is a bear flag, classic bear flag. And these patterns, like we talked about in prior morning calls, spell that this market wants to go lower. We work in a business of probabilities. We don't work in a business of exacts. So we evaluate what the landscape technically tells us to make high probability decisions in terms of A, risk aversion, or where to step in for the probability trade. Meaning this particular situation says to me, as a professional technical trader, that we want to go lower. Impulsing down, contracting. Lots of volatility in here, up and down. Not really, snapping back to the highs. I think it's just a matter of time before we go lower. We talked about our key shorter-term moving averages starting to turn down over the last couple of sessions. And even yesterday, if we look at yesterday's chart, we saw one pump early in the morning. Market just, gave us one strong surge early, but that surge, again, fizzling out and trading down to lows. So big sell-off yesterday for the S&Ps, snapping back mildly towards the end of the session, I think actually gapping up somewhere into this 38.5 area. So we could see some sellers step back in here early this morning, as the market has basically snapped back off those lows. And for those of you who've been through the active trading course, you'll know exactly what I'm talking about here. So we need to keep an eye on how this plays out over the next couple of sessions. I think, if you're an active trader and you're looking for shorts, there's a lot of different short setups out there. We're going to first start with our, highest beta name. That's Apple. We'll go back to the daily here. Apple snapping back to that broken up trend line. Basically something like that. Got that, one powerful day back up, and now right back down. So that's not a healthy sign. I do think that with Apple earnings, which are Tuesday at the close, you could see some consolidation here. You could see, a couple days of sideways, and again, even sideways for Apple could be, $10 to $15 intraday gyrations. So wouldn't surprise me if we saw a couple days of sideways, even maybe a 2-day bounce into earnings, which again are Tuesday at the close. So, tread water lightly here. You don't want to chase price, as chasing price, really isn't going to make anybody money. If you have been actively trading Apple, you know that the VTF has been a great source of information for those intraday trades, because we have been all over this stock, day in and day out. Another high flyer that I think is worth noting, starting to decay a little bit, is Priceline. Priceline's been just a moonshot, breaking these trend lines, coming off from basically 775 down to about 700. We saw a 50% retrace of that move. So if we look at this first leg down, which was here, we got about a 50% bounce. And then yesterday starting to decay again. We saw a move from about 740. I think you could probably play this to the short side if you're so inclined that that's something you want to dabble in. It's a high beta stock, but I think we could trade down to that 660, 650 level in a couple of days here. This is a fast moving stock, so keep an eye on that. Banks, another source that we got to keep a very close eye on. We talked about banks earlier in the week when I did the morning call with Brittany. I believe it was Tuesday. Noting the declining MAs. Notice how Goldman here snapping into this 21, which is the red line, and just getting rejected off that 21. That's usually a sign that lower prices to come. Like we said, we could see a couple of days of sideways here, but banks, to me, Goldman, JP Morgan, really starting to decay a little bit, and it wouldn't surprise me if the banks started to lead us down. FAZ, another interesting trade here. Now, the FAZ is an inverse leveraged ETF, and I don't recommend this for anything other than just short-term active trades. A little bit of a flag here. I would keep an eye on how this sort of plays out here off these lows. This could be, again, this trade's inverse to the banks. If the banks start to come off, you see the FAZs probably start to spike up. So I'd keep an eye on that as well. SH, another inverse ETF, and again, the inverse ETF world, these double and triple leveraged ETFs are trading vehicles only. They're nothing more, as they're built to go down. But when you see pockets of volatility, and when the S&Ps start to break down or the banks start to break down, if you're looking for longs, you can look to some of these leveraged inverse ETFs for trades. Like I said, for trades only, 1 to 3 day type movement. So keep an eye on some of those inverses for a trade. Last night's earnings, Chipotle, CMG came out with some pretty good earnings. Stock's been on a tear. We can look at a weekly chart or even a monthly chart, just so you can get an idea of what this stock has done over the last couple of years. Really extended here on these larger time frames, which again, most of you are not trading off of these time frames. But we could see one more surge up, or we could see a pullback here. The moving averages are substantially lower, and generally when a stock separates real far off, especially off the 21, which is the red line, that's when your higher likelihood vicious snapbacks occur. We take a look at that. You'll see the same kind of thing in Priceline and Apple as well. Same concept. When the stock comes really far off the 21, that's generally when you've hit some sort of short-term top, and you'll get these vicious downdrafts. So we'll keep an eye on that one. As of right now, we can look at a pre-market. Let's see what she is doing here. CMG actually down. We saw a spike up, on the earnings announcement. Again, same kind of thing. Buy the rumor, sell the news. Earnings, caused that one spike after hours. Stock traded up about $10. Now back to that 4.25. So starting to see some pre-market as the day starts here. You're starting to see some sellers possibly stepping in here. That wouldn't be surprising, especially some of these, like I said, with some of these high flyer stocks that have had just massive runs into these earnings. IBM, another big cap stock we talked about, very heavily weighted in the Dow. IBM on the daily chart really decaying. Earnings announcement, and we're now down to the 199.5. We talked about support being down here around 195, so we're going to keep an eye on that possibly in the days ahead for lower prices. Caterpillar, another one. Lots of different potential short setups here. I think Caterpillar is a decent trade against this 110 pivot. I think it will turn back down at some point, so keep an eye on that one. Lulu is another one that I've been watching. I've been talking about it for a couple of days. A little bit of a bear flag developing here. I am short. I still remain short. Stops against this level. Saw some breakdown yesterday in Lulu, and I do think this stock, once it potentially gets through the 72 mark, has room to go lower, possibly into the mid 60s. So we're keeping an eye on that. as a short setup. Not too many great long setups in this market right now. As you know, the S&Ps look like they're about to go lower. It's going to be hard to commit capital to the long side. There are a handful of strong stocks out there. O'Reilly Automotive, ORLY. Again, there are some diamonds in the rough here on the long side that you can look to for possibly higher prices. But for the most part, we're starting to see more of that the sellers sort of step in at levels. So in this type of market, you're going to want to look to short bounces for those of you that are nimble on the short side and understand the way that dynamic works. For those of you that are looking for longs, it's probably, like I said to start the broadcast, it's really, really imperative that you understand that being a trader or managing capital or investing isn't really about, isn't just about making money. It's about assessing risk. And you have to understand when the risks change. When the risks change, or when they look like they're about to change, it's important that you understand that you're accepting of it and you're willing to pare down and take profits and step away, because the market's going to be here for a long time, and the way people make money trading or investing is by avoiding times where there's decay or decline in price, and we're certainly looking like we're heading that way. So keep that in mind as you approach the day. What is your goal here? Are you looking for short-term intraday day trades? Are you looking for bigger picture type trades? If so, how does your portfolio size up to what the market could potentially tell us here? We look at the NASDAQ, we'll look at the Qs. NASDAQ to me looks like, just like everything else, about a week and a half of just sideways trading here. If we can clearly take out these lows, there's definitely room to go lower. And if some of these high beta tech stocks start to turn down, you're going to see the Qs turn down. Google, another heavily watched stock. Really no buyers here since earnings. Big sell off from 650. The last couple of days the stock tried to bounce a little bit. We saw like 2 days of consolidation, but once again yesterday selling off. You can see right into that 8-period MA and just immediately getting hammered yesterday. So a little bit of woodshed trading here for some of these high beta stocks, and you have to keep that in mind. What led us higher could potentially lead us lower, especially if the banks start to roll over. So some key things to watch into the week, the days and weeks ahead. Tune into the VTF if you really want some more detailed specific trading ideas. There's been some great trades on the VTF intraday for those of you that are so inclined. And as always, remember, your job as an active trader or an investor is to manage risk. If you manage risk well, you'll find a way to make money. So keep that in mind as you approach the next couple of weeks. The market to me is starting to really get the feel like it wants lower. As always, a planned trader is a profitable trader. I'll talk to you on the VTF shortly, and have a great day, everybody.